What is up, everybody? Welcome back to the channel. My name is Jake Hagan, joined alongside VEMP Studios CEO Dominic Ryder. Dom, crypto markets looking good. And I should say, guys, we usually do this on Mondays, every Monday, Macro Monday. But for the next 2 Mondays, me and the Doom King, or the Bull King, as some are calling him today, are going to be gone. Dom's going to be having his honeymoon. I will be taking off as well the next 2 weeks. So we had to do an emergency Friday stream, Dom. So much is happening in crypto. First off, how are you doing this morning?
I'm smug in the fact that I literally nailed it.
Oh, come on.
It's
Oh,
such a scam, you know. Like honestly, you wouldn't believe like the antics that market makers get up to. And if you learn their games, then you can just be master of the universe. Like if you look on my tweet just now, like I literally tweeted, I don't know if it was yesterday or the day before, and I said there's a band of liquidity, basically stop losses at 25, between 25 and 25.2. In fact, that was this morning.
yeah. And real quick, just so everybody knows, because we are recording this on Thursday. This is February 16th at 8:15 PST. So this is about 24 hours ago. So this is actually a good test to see if Dom is correct, because we're recording this today. You're watching this Friday, guys, live, but this is yesterday. We recorded this yesterday, just so everybody knows. So Dom, this was tweeted yesterday.
Exactly. At 12. So
well, tell us what it is. Like, what is? So you said, "Hey, Jake Hagan, I'm bullish. Is this a joke?" See that patch of liquidations at 25 to 25.2K. That's where we go. And then after that, when there's much less pain to be had on the upside versus downside, that's when we nuke down. And just so everybody knows, it is 8:16 a.m. and Bitcoin, Watcher Guru, everybody just tweeted breaking news: 25K Bitcoin. Literally 7 minutes ago, we went up to 25.12K, and then right away back down to 24.76.
Click on that, and you can literally see on the chart. Like it was such a scam move. If you click on Trading View, then it will bring up a candle chart, which shows you much better. Honestly, like if you and then click on 1 minute, 1M on the top, you can see this is how much of a scam crypto is. Like honestly, it literally just pumped up to that liquidity spot that I literally said to a T, 25 to 25.2. You can see it. That's this is a liquidation chart. So what it does...
can you explain this? Because I don't know what I'm looking at here, and I don't know if the audience does as well.
So that is basically a liquidation heat map. So it shows you on Binance where everybody has their stop losses. And this is exactly what market makers use. They know where people's stops are and they hunt them. And so you can see there, like if I am a market maker and I want to force people to cover shorts, where am I going to take it? I'm going to take it to 25 to 25.2, where it's that bright sort of green.
Right here, right?
Exactly. That is.
So what is this line? Why is it so thick? What does this mean?
Because everyone's placing it just above the recent highs. Everyone has their stop loss there.
Gotcha.
So you can see
that people, because people, there might be some new people in here. My mom watches the stream. What's a stop loss?
So a stop loss is if I'm short the market at like 25K, I have a stop loss at like 25.2 or 25.3, so that if it does go up there, it takes me out of the trade. So when you're shorting and you have a stop loss at 25 or 25.2, if you're selling, you are forced to buy back when your stop losses hit. So that's why you get these spikes, because people get liquidated on their short and it forcibly buys it back. And that's why if you click on the chart, you can literally see that the market makers forced it into this channel. If you go back onto the Bitcoin tab, you can see that they literally forced it into that channel, that 25 to 25.2. And straight back down again, because it just saps the liquidity. So if you scroll with the mouse, it should zoom out a bit, or if you click on like the 30-minute, it would just give you an idea of like how much of like a scam move this was. Like honestly, it literally just went there because everyone's stops were there and immediately back down. Literally just took people out. That was like 5 minutes. that move. Like, that's what market makers will do because they know where everyone is liquidating. Everyone's going to get liquidated from. Look, there you go. Look, the top comment. I'm done.
I know. As I was just reading, he said, "Cryptomania says Bitcoin. I'm done with this manipulative, speculative shit for now. I refuse to make whales, which see it in the next correction if it ever happens, and it's a decent correction. I'll go on with what I already have. This is some utter FOMO manipulation and make no sense at all."
Thing is, so yesterday, in fact, a few people messaged me, and I was talking to our market makers, and the liquidations did not make sense. Basically, the move, this is like a completely artificial move. That's why I knew it would get to 25.2, because it's a max pain market, which is stop out as many people as possible and make sure nobody sees the move. But here's the thing, right? The reason why I think we nuke from here is you can see if you're a market maker and you have just taken out that higher patch of liquidity, so that line, where do you go next? Like, there is, if you are hunting for stop losses and you're looking for liquidity
here, right?
Everybody is now bullish. They're literally like the final like line of liquidity just got hit into it. Literally sapped it, came back down. And now you can see that if they want to cause max pain now, max pain is no longer on the upside. Max pain is on the downside now. Literally everybody. In fact, I can show you on. I should be able to show you on this chart. If I zoom out, I can.
Yeah, pull up yours. We'll go ahead and do it, guys. And thank you, guys, everybody that is joining us here today. Make sure to hit that thumbs up, guys, if you enjoy the Macro Monday show. We want to come to you emergency stream on a Friday to talk about what's going on here.
Let's go for screen.
Absolutely insane, but it was wild. Like right when I started this stream, guys, Bitcoin was at 25.1. Dom's like, go look at it now, 24.7. I was like, what? Like literally, like dropped what, tens of millions of dollars? Insane.
There you go. As in, like, this is like a very zoomed in chart, so you can't see it as much because this is the liquidity lines. Because what I showed you before, it had like these. The top of these were like billions rather than millions.
So what? So walk us through this. Obviously, on the right is the price of Bitcoin. The left is what? Is that volume?
Yeah. So that's like the levels basically. So you can see we literally just came up here and took these out. And now you can see where is everybody's stop losses. Here, there's a big old juicy line. Like we literally just like hit this part. Like what? There's some people who've loaded up here like 25.4. Yeah, so a few people would have entered into shorts now, basically.
It's not a fair market at all, dude. Like this is like it's like it would be impossible to go above 25.2 because of all the stop losses.
Well, no, because the stop losses are when you hit those, it buys it back. So that actually causes spikes up.
So then why did we dip so much when we hit those?
Because the market makers got their liquidity. They were searching for those stop losses. Once they got them, because what you have is a cascade effect. So where you are as a market maker, you are buying, and as you buy, you push the price up. As the price goes up, you hit shorters stop losses. They are then forced to buy back because how you short is that you borrow Bitcoin from somebody and then you are either pay it back when you close your position with profit or you pay it back when you have to close your position with a loss. So when it hits the stop loss, those people who are betting on it going down suddenly have to buy, and that buy pressure causes the price to go up, and then you hit other stop losses which causes it to go up, and that's why you have these wicks and then straight back down, because the market makers purposely target those stop losses because they know if they hit 25, the people with their stop loss there at 25 will have to buy back, which will force it to 25.05, which will force it to 25.1 to 25.15 to 25.2, etc., etc. Sure. So that's why you have these wicks, because the market maker who caused that pump, they got out after that 200 points.
So they're selling. So once they know it's going up, and then they'll sell on that 25.2 run up, right?
Yeah, because they forced it by liquidating everyone else's stop losses. So the market and retail as well as like other smaller players, basically was their exit liquidity. They knew if they drove the price to 25, the stop losses would do the rest, and they exit at the top.
So who are these market maker whales? Like, how do they have so much money, like so much power? Like, how can you manipulate Bitcoin? So, like a market cap that's larger than Visa today. It's like how can you manipulate it so easily?
Is it larger than Visa though? Because at the end of the day, like, is it at trillion at the moment?
I
Like,
mean,
it's
I saw Watcher Guru's tweet yesterday that said the market cap was larger than Visa. It's at 478 billion.
yeah. Again, I mean, you got to think about like Amazon is like got to like Amazon got to like 2 trillion, Apple got to 3 trillion. Like they're back down now, but like this is just the amount of people who are trading a single asset with 100x leverage. Like imagine how many people are trading it on Binance, then how many people are trading it on BitMEX, on Bitfinex, on all of these exchanges. Everyone is just leveraging it and trading it. So you have so much on derivatives, like 70% of all volume is on these derivatives. And so if you actually have like jump trading and like Jump Capital, Alameda before they blew up, Free AC before they blew up, if they have hundreds of millions, like that's like 20% of the market cap. Sorry, if they have like 100 million, that is still like because 100 billion would be 20%. That's still like 0.2% of the market cap of a company. Like, so if you think of Bitcoin as a company, if you control, I think it's just 0.5% of shares of a company, you're allowed to do a takeover bid for that company. So it shows you like the levels of, and also like you don't need it to go up everywhere. You have arbitrage bots. So if you force the price higher on one exchange, then people will buy on the other exchanges in order to sell into the higher exchange, which brings the price up on other exchanges,
Yeah.
and lowers the price on the one that you're on. So all you need to do is heavily, heavily manipulate the market on just one exchange. And there's I wouldn't say a conspiracy, but there's a theory. So if you look at the last Bitcoin pump, that was literally Binance. So it's all on the BUSD Bitcoin pair.
No way.
And then, funnily enough, the set comes out and BUSD can no longer be used. So isn't
Really?
that strange? So the SEC have banned BUSD now, haven't they? They made Paxos ban it. So funnily enough, we had a massive BUSD-led Bitcoin pump on Binance, and then suddenly BUSD you're not allowed to use it anymore. So if
No way.
they would have known, Binance would have known that enforcement was coming. And that means that they pretty much swapped all their BUSD to Bitcoin.
No way. That is insane.
So this is the thing, like if you can,
Wow.
if you have the liquidity, like this is where, like for example, on exchanges, people think that like a DEX market is the same or linked to Gate or Qcoin, and people, whenever I send like tokens to an exchange, immediately people think you're dumping. But people don't realize if you don't keep the arbitrage yourself, then the exchanges will just dump into your pool. So if you don't actually arbitrage and keep the price consistent with market makers, then somebody else will do it for you. So it's much better to actually have that control yourself, because then you can make sure that it's not done, because otherwise you're just going to get dumped on by the exchange. So all you need to do, and if you're Binance, obviously, like the amount of money that you have, the amount of like stable coins that you actually have, like if you control your market, all you need to do is raise it to the certain level you want and then hold it there, which means that you have to absorb everybody else buying on other exchanges and arbitraging into you. But if you can fill the order book with enough depth to manage that, every other exchange will rise to your level.
True.
If you can maintain it.
True. Yeah, it's very interesting. You know, it sounds like it's it's an easy game to manipulate, but that's the first time I heard that, BUSD, the last pump of Bitcoin, and now we're seeing, the SEC banning it. And just so everybody knows how recent this was and how accurate Dom was, right? I'm not here to jock ride Dom, but this was literally, I mean, you guys can see here, it's 8:29 a.m. my time. This was 7:53. Like they just came out and said 25K Bitcoin. This is when Dom literally, you tweeted this 7 hours ago, so way before 25K Bitcoin. He said, hey, Jay Gagan, I'm bullish. See that patch of liquidations at 25 to 25.2K? That's where we go. Then after that, that's when there's much less pain to be had on the upside versus the downside. That's when we nuke. And then you even said, checkmate. And now time for the hammer. And now you can see literally, like, this is all, I know this is recorded yesterday, guys, but I guess we are climbing back up again now, Dom, 24,803. I mean, do you think that we might?
Well, I mean, the main thing is that, like, it's getting back to those highs. As you can see by the liquidation chart that I shared before, like people add that liquidity back on. And if people keep on giving that exit liquidity, they'll give it. As in, you can see here that they've got, so there's a bit more added up here now.
We could. Is this a live chart? Like, does this update live?
Yeah, so we could. But then again, there is also yellow is the brightest. So there's much more. So if yellow is like 500 million, there's much more liquidity here than here at the moment.
Are market makers looking at this? Like the big market makers, are they looking at this chart and they're like targeting those levels?
Yeah, so this is all, I pay for this. So this is all like stuff that you can only access if you pay like fees. So
how much does this cost?
So I think this one
high block capital.
So you got different levels basically.
This is the stuff that they talk about like on Wall Street, kind of, like how Wall Street and like those traders have like special tools that they can see that you don't have. Like this is the type of stuff that they talk about.
They got this is this one is specific for crypto. But yeah, like Bloomberg terminals and everything like that. So you can see the darkest, the brightest yellow.
Tools.
Brightest yellow here is like around the 24.2, 24.1 mark. There is some liquidity up here, but not as much. Like that candle here, which is like 25,450. That's got 457 million. And then this one here, you've got like 537, 419, 509, 440. Whereas this one, you've got 457, 220, 385, 367. So max pain is arguably on the downside here now. But again, you could retest here, get a little bit more liquidity and then go down. But you can see that the more and more stop losses are now being placed underneath, which means that those are longs. And the exact thing that I said happens here, where they bought in order to make short sellers close their positions and buy, the exact same happens on the downside. So you can have all of those yellow bars, those are where people are long, and if their stop loss hits, then they have to close and go short.
Makes sense. That makes sense. So let's do a little game, right? Because we're here. This is actually fun. We can test the Doom King out, and right now it's the 16th of February, 2 days after Valentine's Day. These are the current prices of cryptocurrency. Let's play a game. We're airing this live on Friday. Let's see, where will we be on Friday if everything goes to the Doom King's plan? Let me just say, we're at a $1.12 trillion market cap. Do you think that we're going to be higher or lower by the time this airs?
Well, we're back at 25K. 25K, that's like a bit delayed, that one. So we're at 25,050 already.
Let's go.
So it looks like we're going to be sapping that liquidity up towards 25,600. But yeah, so you can see on the thing now. So we're going for this by the looks of it. So 2450. So there's 4-3. Yeah, there's not much above 550 really.
So we might run, if we zap through that 25.6, like we might run up to the threes maybe, right?
There's not really much that would force it up there. You can
Is
see
that liquidity? Like these, oh, I guess these stop losses do force it up there, right? Because it's like that's how people get liquidated. They have to buy.
yeah, exactly. So it will force it higher, but you can still see like 457, 385, 367, 368, and then it drops off a lot after 25550.
But are stop losses really the? I mean, are stop losses really the only thing that forces it up there? Like, can't we have people in the market that are like, "Holy shit, Bitcoin's going to 25.6. Let me buy in." Like, does it have to be these stop losses?
Well, no, I mean the thing is that is what people do where they FOMO in. So whenever you're buying on an exchange, like the automatic thing to do is to place a limit order, which is the price that you want to buy or sell. And that's what smart people do, because you do the analysis and you check what's a good level for me to buy, and then you decide where you would like to buy. But market buys are predominantly done by retail, because institutions don't market buy. They just play around with the limits because they know what areas are going to be targeted, and they know where you can see here, like for example, where that bottom liquidity is, like 23 and a half. Like you can be fairly sure that you'll get a bounce from this sort of level. Whether it because it will get down to, if it came down to like here, you'd probably expect this to like capitulate around like 24.1, 24.2. And then dependent on where people place the liquidity, then either it will probably hang around here for a little bit, and then it will wait to see, do people add size on top and short it? And is there more liquidity if they were to go up and sort of sat that, or do more people buy the dip? And the thing is, everyone is getting more and more bullish, which means that before, and as you can see, like up here, people are adding stops, but the bears have been screwed for a long, long time. And a lot of them are no longer shorting because they don't feel safe anymore. And that is the main thing. And why people will always come back and say to me, like, are you bullish yet? And there's no amount of, that's why I focus on macro specifically, because there's no amount of like price action that will change my mind, because I know and I'm confident in the direction. Therefore, give me higher prices and I'll add more size. When you flip, like in my head, like I think of flipping all the time, but that just reminds me that we're getting close. And the market can stay irrational for longer than most people can stay solvent.
I love the way you think about it. Will there ever be a time where you're on the show and you're bullish?
Well, if it was earlier today, I would have been, but unfortunately, just before we went on,
You'd have been bullish, like short. I mean, I'm talking about like long-term bullish. We're like, Jake, the bull run has started. We're going to 100K. Like,
yeah, I mean that will be completely led though by monetary policy for me.
Jerome Powell and everything that's happening with the
with the Fed
America.
and with because you have so the Fed is monetary policy, which is like interest rates and QE, and then you have fiscal policy, which is government spending. So, like for example, when they gave stimulus checks, that's an example of fiscal, whereas monetary is the Fed. So, I mean, the immediate people think that a Fed pivot is bullish, and it is long term, but the actual stats is that if the Fed does pivot into a recession, the stock market goes down by like another 10 to 20% after that period. It's not actually that bullish. Long term, obviously, it means that there'll be a recovery, but it's just one of those things. In fact, I think I tweeted a video of it, which is like 2-minute clip, which is worth watching because this guy called Kolvanich, Jay from JP Morgan, he was on Bloomberg today, and he was talking about the risk that we have to financial stability from the fact that we have 50% of like volumes going into options, going into 1-day dated options. And options are just gambling. They're massively leveraged vehicles which just literally bet on like the outcome day to day. And they're very much like basically they cause the same effects basically that I told you about cascading stop losses. Let me see if I can find a video. Are you still on Twitter?
Yeah, I'm on Twitter.
So yeah, there's a couple of charts on there, but essentially it's what's been causing all of these what's called a gamma squeeze. If you click on the underneath part first, so the thing from the QE Infinity.
This is insanity. Mad market speculation. Read the article in the link below. ODTE option volumes are now hitting $1 trillion daily. JP Morgan's Kolanovich warns of Volmageddon 2.0 risk in options.
So yeah, I mean, you can see by like those are quarters. That's going back to 10 years, and that is the amount of options that expire in one day. So options are used by hedge fund managers.
Jesus.
They're used by hedge fund managers to manage risk on the long term. But now Robinhood started offering them to retail, and retail are betting them on the dailies, literally on the daily. But this isn't normal, and this sort of leveraged trading.
Holy shit!
Goes like to. It means that yes, it can squeeze higher, but on the downside, it can cause like limit down days where they put the circuit breakers on.
What are your thoughts on retail? What are your thoughts on retail? Like the fact, like we talked about this back in, even like 20 years ago, it's like you had to call in to place your orders. You had to call a stockbroker, right? Like now everybody, their mothers, their grandmothers, kids that have no idea, people with no money are now traders, right? Like I go in the barbershop and everybody's talking about the Discord groups they're in, the trading that they're making. And I'm like, bro, you don't understand anything about money, stocks, nothing. It's like, what are your thoughts on retail's impact on the market?
So it's just exit liquidity. Like Citadel, they literally buy the order feeds from Robinhood, and they made like record profits. And
wow.
The attitude of retail now,
crazy, huh? That's a crazy statistic, bro. It's like they literally, like everybody's like, oh, it's free trading on Robinhood, but it's like the big dogs are literally giving you money to trade so they can make more money. Like that's kind of crazy.
They counter trade retail basically because they can see, just like I'm showing you these heat maps on Binance. Who do you think? How do you think they get that data?
That's the tools that they have, like what you call it, the Bloomberg analytics.
Yeah, well, you get Bloomberg terminals in the stock market, but Citadel buy the order flow from Robinhood and then counter trade it. That's where Robinhood make their money.
Shouldn't that be illegal? Shouldn't that be illegal? Like a little bit illegal.
It's not whether it should or shouldn't. It's not, and it won't be because it will only start. It's like basically. What should be not allowed is allowing retail to use these sort of leveraged options because it's going to be used against them and it's going to end very badly. But the problem is that the government and the Fed, they do not regulate until there is pain. They never stop they never stop speculation. And the video that was above that QE tweet, that explains this in a concise way. It's definitely worth putting on for 2 minutes.
We can watch it here. For some reason, my audio is fucked, so I think you guys will be able to hear it, and I'll have to watch it afterwards. Let me see if I can pull it up right here. This should have it. Please, Lord, please let this audio work. Dom, just give me a thumbs up if you can actually hear the audio when I start playing it.
A new Republican President Herbert Hoover was inaugurated. In his address, he reassured Americans.
We have reached a higher degree of comfort and security than ever existed before in the history of the world.
But behind the scenes, he was less confident.
Hoover is actually skeptical about what's going on Wall Street and the economy generally. But he doesn't have the political courage of his convictions. And so when he becomes president, he does nothing to rein in this wild speculative fervor. He doesn't do anything to encourage the Federal Reserve or the Treasury to tighten up margin speculation in the stock market.
In private, Hoover talked of an orgy of speculation, but like his predecessor Coolidge, he had no appetite for regulation of the marketplace. Yet Hoover was not alone in his fears that the stock market bubble might be about to burst. Days after the inauguration speech, a prominent and highly respected banker, Paul Warburg, broke ranks with the Wall Street aristocracy and issued a bleak warning.
If orgies of unrestrained speculation are permitted to spread too far, the ultimate collapse is certain to bring about a general depression involving the entire country.
My great-grandfather issued a warning in March of 1929. He actually used the word a depression, and he was shouted down. I think he was disregarded. He was, a party pooper. I mean, no, everything's fine.
Everybody's making money and having a good time at the party. So when there's a good bull market going on, the person who says this might be getting overvalued, you better be careful, he's sort of dismissed.
Warburg's prediction fell on deaf ears, and between May and September 1929, 60 new companies were floated on the New York Stock Exchange, adding more than 100 million shares to the marketplace, fueling the investment bubble.
All right, so there you have it.
Did you get a chance to listen, or did it not pull through for you?
No, it didn't come through for me. I got it because I don't have my headphones, so it's like playing through the audio. I don't know how to explain it, but explain what we watch. Everybody just watch that. I'll be watching it later, so I'll watch it right after the stream.
They would have, yes, it's the exact same attitude going on in the market now, in the fact that this person, this pool person whose granddaughter was on the thing, he literally warned like 6 months before the Great Depression and said, like, if this orgy of speculation is allowed to continue, we will see like a depression like rip through the whole country. Like, literally said the word depression, and that was 6 months before the Great Depression. And like, even the president Hoover at the time, he referred to the stock market as like an orgy of speculation, but nobody ever wants to do anything about it because it's extremely unpopular. In a bull market, everyone's making money. Like, everyone who has been long and like buying this rally thinks it's going to continue, and they refuse to hear differently, and they make pariahs of like people who speak against it, because why would people want it to end if everybody is caught up in it? If you speak out against it, you are literally like, I think like this guy Il Capo Crypto.
Yeah, what's up with him? He's trending on Twitter. He's short the market, and people are going after him.
He hasn't even like posted that he's short. All he's said is that he thinks the market's going to go down. Like, he hasn't posted like, I'm short from this level. He's been shorting for like a while. Like, he's been saying it's going to go down from like since like 21.5K. I mean, I've been saying that, and it's true. Like, it is going to go down, but people are just discounting the fact that, like, time frames are different. I mean, he's probably been liquidated a good few times.
7 hours ago, he came back. He came back 7 hours ago.
Again, so I mean, I don't get the fact that it's trending, that he said that he's not buying, tells me everything I need to know about whether this is a sustainable move higher. Like, imagine trending on crypto trending on Twitter just for saying that you're not taking part in a rally.
So what, this man's tweet makes you feel more comfortable in your thoughts?
Not the tweet. The fact that he is trending on Twitter because people are laughing at the fact he's not buying.
I got you. Okay. This is a good point. Someone said, state the obvious, mate. Too late to buy now. You've missed the meat of the move. Reality is that most people didn't buy the bottom. They just held all the way down. Now they are recovering some losses from the bear market. That's why they celebrate by mocking others, because they had a lot of resentment inside. Otherwise, they would just be happy. Second part may be true, but the first part is definitely true. It's like a lot of people, like myself included, I bought a lot on the way down, right? Like, I saw a $40 Solana. I was like, holy shit, it was at $250. That's a good buy. A $12 Polkadot. Now it's like a lot of people, I'm sure, right? And I even dollar cost averaging on the way down. I'm still dollar cost averaging, but a lot of people probably We're just holding. Majority of people were probably just holding from all-time highs, and now they're starting to see some sort of a comeback.
Yeah, I mean, this is the thing. I mean, people love that to get over enthusiastic, basically. Like they said, there you go. He literally said, but in my opinion, this one artificial pump BUSD and USDC and could have stopped before. 12K is still likely, and local top is being formed, so it makes no sense to buy now. I mean, look, he's right. I mean, it can't last forever. It's an unsustainable move. Every macro indicator is telling people this. And in my personal opinion, what is so mental, right, is that this is the exact disconnect you had, and why I encourage people to watch that video. This is literally like to a T exactly what happened in 1929, in the dot-com period, and in 2007, 2008. Like, everybody is making money hand over fist, and the market is ignoring everything. People are over speculating, and in 1929, it was called margin loans. You could go to a stockbroker, you could give them 10%, and they would give you and loan you on no collateral whatsoever, just the collateral of your own stocks. They would give you 90% additional. They'd 10x your money from you. You'd walk into the stockbroker, you'd borrow money, it would go in the stock market. And that allowed that everyone kept going. And it works. It's like a flywheel. It works really well when it's going up, but then on the way down, it all unwinds, because it's just everybody is trading fake money that they borrowed. Like, it's the same with hitting these stop losses, where you borrow the money and it goes against you, it pushes higher. The exact same happens on the way down. And as you can see, like by this chart, it's falling into the favor of the bears, because the more bullish people get, the less people short, and the less people short, all of the move higher has to be organic. Like, it has to be buys. At the moment, it's not being buys. Like, this is all being liquidations. And when everyone stops selling and stops shorting, people stop getting liquidated. And when they stop getting liquidated, all the buy pressure has to be organic. And who is really going to be buying at this level thinking it's going to go up? Retail. And that's why they're the exit liquidity, because it's not them who's pushed it up higher. It's the market makers who've pushed it up higher. They're the ones who will be thinking that this is the start of a bull run, and they'll be buying at market, and then they will be the ones holding the bag.
That's why I like this show, because I don't pretend to be a financial trader. I don't pretend to know anything about that, right? But I have you on here. You've been right 98% of the time. Like, literally the past 3 weeks. Right. We started off this show literally. I mean, Watcher Guru was like, breaking news, 25K. Dom, on the other hand, he's like, hey, we're gonna hit 25K and dip down. We did exactly that. Let's talk about this though. Let's just say, right, this time tomorrow, because this is when it's gonna go live. Give us some predictions. Where do you think it could go? Do you think we're gonna be higher than 24.9, or do you think we're gonna be lower?
I mean, it's like you can see on the chart, like these spikes to catch liquidity, they don't last. They go up and then they come back down, like you've seen there. Like, but we could
wick up.
We could wick higher again and get to like maybe up here at most. But there's not much. Like,
what number is that? I can't. It's small on my end.
Like, as in, like the main liquidity is like
25.5.
Yeah, 25, like 25.4 to 25.5.
And this is like such a live chart. Like, they don't show you the liquidity.
Yeah, I'll update it now to see what.
But they don't show you like for tomorrow though either. It's like it's so live.
Yeah. So again, like this is just getting brighter down here compared to what it was before. So again, the main liquidity is lower. That's the thing. But
give us a range this time tomorrow. If you had to give us a range, like it could even be below, it could be 1,000 or 2,000, whatever you think.
If it wicks up, it will wick up towards like 256. It will probably get up to like here. Well, it will get up to 25625. But the thing is, if it dips down here and it gets into here, this is like heavy liquidity. And there's heavy shorts here. And there's a lot of it. all group, like here you can see it's like sporadic, like there's barely anything in here, like there's like 64 million, like 40 million. Ooh. Go back on that, but you can see like where the colors aren't the thing, but you can see it is loading up more and more. The thing is, this has to be organic. See, there's not much to like liquidate here. There's a little bit, but it has to push higher fairly organically. But once we start getting into this level, like you can see it's dark, it's like brighter all the way down, and then it gets here. And if we smash through this, then like we'll continue on down here, and then it's cascades because there's a lot more liquidity on the downside. And funnily enough, you can even see this in stocks. I'll see if I can find it and forward it quickly into like the Telegram here. But I saw that the options market was saying the exact same because this is why I was saying that there's and in fact, this guy, this analyst Kolvanich that I mentioned, he's from JP Morgan. He's like a director and like a head analyst, CFA of JP Morgan. Even he is saying that this is like a risk to financial stability. And like that means very serious financial risk, essentially. But you can see the options. Here we go. Let me see if I can, if I send it to you. Then that can be, here we go. I'll quickly send you the images on Telegram. Unfortunately, I've got Windows now, so it doesn't, I can't just airdrop it like it used to be able to. But you can see on the table that I sent specifically, I sent two, but you can see where all the options are.
See if I can pull this up 1 second.
If not, I can attempt.
I got it. I got it for you.
There we
go.
go. So that's the sort of general. That was where you had the options up and the general direction afterwards. But if you go onto the table, which is the one next to it, you can see. So this is where all of the options are. So these are like the strikes, basically. So if we get to the 4050 and we break down below it, like there is so much unwinding at that level. Like look at the size of puts which close up at that level. Like puts are betting on it going down, like puts are shorts, calls are higher. So you can see the levels where like we have this sort of like gamma move where it just squeezes because everybody gets exited at the same time. And it happens in stocks, it happens in crypto. It's all the same. And you can chart these and you can see like where the calls are and where the gamma is. And you can just basically buy where there's all these calls placed and then sell where there's all these puts placed. But yeah, the market right now is like manipulated beyond anything. Stock market, crypto, like it's being played. So, which is why I said to, I mean, I've been tweeting a fair amount about it and saying like, I'm staying the hell away from this market in terms of like not going heavy on anything, just watching and just, you know, picking my levels a lot because it's ridiculously manipulated.
Insane. Well, guys, that's the show right now. We wanted to do a emergency stream. Dom and I will be gone on Monday as well as next week. So we won't be back till March 6th. We'll be back. But Dom, great stream. I'm glad we were able to do this today. And guys, hopefully the predictions are right. Look, he called it. He's been 3 weeks in a row. And we'll count this as week number 3. So we'll be back. #1 show on YouTube. Make sure to subscribe to the channel. Dom, your final message to everybody that tuned in this morning.
Don't get over exposed on either side. Keep space because like there are people who are hunting your stops, whether that's long or short. There's somebody who wants to make sure you don't. People make money from you losing it. So make sure that they can't manipulate you.
There you go. That's it right there. Dom, have a good honeymoon. Everybody, wish Dom a happy honeymoon. We'll be back March 6th. I'll be back sometime next week. We appreciate you. Emergency stream. Thank you guys so much for tuning in. We'll see you on the next episode.